Subpar earnings reports really didn't matter yesterday. Made a new high for the new, no new closing high for the move. Starting to weigh on the markets today. Is this rally losing steam? Earnings. We'll talk earnings at 8:35. David Trainer, New Constructs, breaking down the fundamentals of those earnings. Can we hold 5,200 in the S&P? We'll also talk about the IWM on pre-market prep.
Welcome to Benzinga's Pre-Market Prep.
This is a volatile puppy here.
It's all about execution styles and strategies.
All right, a choppy close. We couldn't hold that closing price at 13.75. We're down a little over 10 handles, clinging to that $5,200 area, as I mentioned. The buck is up 14 cents at 105.44. TLT just quietly in the red by 35 cents after a couple good days. Crude not under 80, not under 79, under 78, down a buck 01 at 77.37. Gold pretty flat here at 23.23. Silver down a couple pennies, 27.52. Bitcoin futures, they're down $840 at 62,525. Triple D, I mean, doesn't it seem like sometimes like the market says something like with earnings and whatnot, and the market just doesn't want to listen. That's kind of what it felt like. I mean, what a disaster in Disney. I mean, that was an epic disaster yesterday, and what's going on with it.
I mean, this earnings, at least the last part of this earnings season, we know the mega caps did okay. There was a few hits meta, but they, did okay. So far, not so good with the mid caps and the small caps that have been reporting. We've had a lot of disappointments. I know there's been a few, good moves, and there's a couple here today too. But the majority of companies here, we're seeing earnings warnings, we're seeing slowdowns, we're seeing a lot of stuff that we don't want to see. Let's bring AB into this conversation here too. Maybe it's selective perception on our part here, but this night here seemed pretty terrible, actually. You got Reddit that's doing okay, but you start going across the board from the companies that reported, last night and then into this morning. And there's a lot of companies trading significantly lower here. And the moves are big. I mean, it's not like, they knock down, it's bad earnings, they knock it down 3%. Now, Shopify comes out, the earnings, and you're down 18%. I mean, these are big moves here. AB, huge. What are your thoughts? Just let's talk overall so far, because we're halfway through this earnings season. The mega caps are behind us. We're getting into the small caps, mid caps, but I'm not liking what I'm seeing so far.
Yeah, to me, it felt like when we got through the week where you had all the mega cap tech stocks, your Amazons, Google, it felt like we're treading water. We survived that week of reports. The reports were okay and pretty, good across the board for the mega cap tech stocks. But the other companies that have reported since then seem to have been a lot of them kind of flagging a cautious guidance looking forward. I mean, especially, we can talk, Rivian too, but I mean, especially in like certain industries, it sounds like executives are being very cautious right now, which is, it just doesn't seem like all systems go this time around on this earnings season.
Yeah, and we know if you want to start with Rivian, maybe this is the one to start with here. We know, obviously, Tesla's been struggling here. We've got the numbers, and Tesla quarter was not good. I mean, it's bounced up on hope, of a lot of other things, and, now that hope's starting to fade here. Tesla down here again this morning. But let's start with Rivian, because we get the big pop yesterday on, Apple, maybe going to do, not a takeover, but they were talking about some type of collaboration, rumored. We didn't really hear anything more about it, so rumors still rumors. What they did, though, was right off the opening print. Real money, institutional money said, oh my gosh, Rivian trading up 80 cents on this, sell it now. And within 20 minutes. Yeah, seconds after the open, and it opened up there, went straight down. But within 20 minutes, it given it all back. And then last night, Joel, we pop again on earnings. We get back up over $11 on the initial earnings report, and the same institutions probably are like, you got them. We don't want this crap. You got them. Boom, 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 selling. and it gives it back immediately too. And now we're trading down 71 cents. And what is the story here? Stocks that are in huge downtrends, and Rivian is when there's hard to argue with stocks that are in more downtrends than Rivian. $179 a share back in 2021 just continues to go down seemingly every day. We're talking about a single-digit stock here. Now, valuation never made sense at $159. We got David Trainer coming on later. He'll talk about probably valuation on stocks like this as well. Never made any sense. And now, it's starting to look like that, this company is going to be fighting for survival. That's where I think we're at in the EV. The EV trade has just been so bad. And now with Tesla struggling as much as it is, you got to start thinking these other ones are going to be like 50-50 whether they make it or not.
Yeah, it's one of the industries that is looking a little, kind of sketchy right now as we head into the summer right now. Big ticket items we know are not in favor. The numbers here on Rivian, EPS at negative $1.48, missed the negative $1.25 estimate. Sales came in at $1.2 billion, which actually beat the $1.16 billion estimate. But then the company gave some new, reaffirmed guidance for its vehicles, and I think the delivery numbers the market was looking for was actually higher than what Rivian said it's expecting to do. So, when you're in this stage of the company in Rivian, if you're saying, oh yeah, we're actually going to start selling a little bit less cars than we anticipated this year, the market is not going to like that. And again, just a crazy trading day for Rivian because you were up, almost 10% yesterday pre-market when we were doing the show. And now we're down, 7% heading into the open. So, very much kind of a roller coaster ride for Rivian yesterday.
And again, it's just difficult. So it's just difficult for stocks that are in these huge downtrends to go up because there's just so many bag holders. It's bag holder central in Rivian. Basically, everybody who's ever bought this stock prior to April, because it had the little rally in April, is down money in it. And people don't like selling at losses. So this is why we call it bag holders, overhead supply, all of those things, because the hurt, this mentality of, and it's from behavioral finance called loss aversion. People do not like to sell at a loss. Majority of investors will not take a loss. The reason the number one reason that I am successful in trading is because I take losses, because I'm disciplined. I actually take the opposite side of the majority of investors who just bag hold everything to death. So you've got to take losses. You've got to admit when you're wrong. You got to move on. Anybody who's bought Rivian has been wrong. Lucid, Fisker. I was in Fisker for a while, and I made some money and then I lost some money. Take the loss, move on. Because you know what? Fisker's off the board now. Lucid has the Saudis behind them. That'll help. But again, it's $2. What was it, like $100 or $80, whatever the hell it was, $60? I mean, this EV story is just painful. They know the big three, obviously Toyota, all the big guns moved to hybrids. That's where the money is moving into here. People are not, the EV revolution that was supposed to come imminently is looking like it's very far delayed, if not coming at all.
I've never heard anyone talk against their position more in my entire life than you, Triple D, Dennis.
On what?
Your Tesla.
Because everybody talks to me about it.
You're talking against your own position.
I talk against my own position.
You're talking negative about EVs.
Yeah, I'm talking against my own position. You're absolutely right. Yeah.
Yes.
No, it's true. I'm talking against my own position. And I probably, you had the call, Joel. You're like, this, was Musk's, bringing it up. And, I got suckered into it again. I sold the stock that I bought at 185. I sold it at 181, took the small loss. Thank goodness. Willing to take losses. I lose 4 points. I'd be down 13 points on that right now. So I'll thank Joel Elconin for that, who actually was a person, a lot of other people talking me out of it too. But Joel, I've done the show with you for 10 years. I very much respect your opinion, and you just highlighted it perfectly, saying he, knows how much the business is struggling. He really talked up the other businesses. I got suckered by the Elon Musk talking, deserved to lose money, down money on it again. I'm going to hold a little piece. I have a small piece still now. It's getting smaller. Probably will hold that original piece that I bought, which was small, but I'm so glad that the big chunk that I bought at 185. I took the loss at 181. And I talked about that on the show. You got to take losses. It's okay to be wrong. It's not okay to stay wrong.
Real quick, I want to do the Rivian, and then I want to move on to some other disaster reports. We got a step down seller here, and they're not lightening up. Do we have a spike down? We are at the lows of the pre-market session right here, 950. Not much on the dailies here. Maybe a cycle. Like if you're trying to hold out, you really think this is going to be a whoop day. Maybe go out there, see what happens at $9. I see 4 lows surrounding $9 at the end of April and the beginning of May.
All right, so we're talking about earnings reports, and in Rivian's case, they report earnings and then they give some guidance that the market doesn't like. If other stocks, may report earnings and then a week later lower guidance. That's what we saw this morning. We had Intel, ticker INTC, come in this morning and lowered its Q2 forecast after losing export license to China. Intel trading down about 2% on this news this morning. I mean, this comes after the company got hit after the earnings report. So now you're looking at, we haven't been below $30 in Intel since June 2023. So almost a 52-week low here in Intel.
I hate this stock. I'm the worst Intel trader there is, I think, because I had the dang thing. I bought it at like $32. It went down to 25. It came back to 28. This was 2023. And I'm like, you know what? This is just a dog. I'm just going to cut this loss and move on. And then the thing went to 50. And I'm like, just kicking myself because I was in it pretty good. And, obviously, I had the huge rally. I didn't participate. And it comes all the way back down. I'm like, okay, I'm going to buy this thing at 35, reload this thing because I think eventually they'll figure it out. Well, here I am 2 weeks later, 3 weeks later after that purchase and down like 20% on the position. Taking it through earnings was a mistake. Holding on to it is even more of a mistake. This company, absolutely. You know what my professional opinion is on this company? They suck. They suck. They've dropped the ball so many times. AMD, think about where they were 20 years ago to where they are now. Intel Inside to kick my computer all the time because it's got an Intel processor in there and doesn't work half the time. Crap. Figure it out. Fire everyone. That's where I'm at on Intel.
Yeah,
Fire them all.
I know.
Fire them all. This company is so poorly run. This is like the biggest bull market for chips. Right. Everything happening here, and you have AMD. Obviously, has figured it out. Obviously, it's come down lately, but compared to where they were, Nvidia just firing on all cylinders, and then you have Intel that just cannot figure out whether they're coming or going or what they're doing. They're needing government subsidies coming in. Well, then they're blocking, blaming other people. This company absolutely sucks.
Yeah, for Intel to be struggling so much under this backdrop of like your industry is growing and the AI demand and everything, you have other companies that have just beat and raised. Then Intel comes in with their reports. I mean, if you want to hold best in breed if you're trying to invest in a growing industry, and certainly Intel is not that right now.
Oh, it's worst of breed. It might be the worst in its industry of all industries. It might actually be like worse than like Lucid and Fisker and EVs, like to Intel on this. It's just, anyways, I'm exaggerating here because
there's more bad news.
I don't think they're going out of business, but this has just been terrible. The industry firing on all cylinders and this firing on no cylinders, negative cylinders.
I know. That was such a gift. That rally to 50.
Such a gift.
Oh my gosh. I mean, you just kind of feel like one of these times it's just not going to come, and this is the way it feels. It's not coming back. Dennis, I hate to bring it up. More bad news on Tesla here. They're checking to see if they committed wire securities fraud in their self-driving claims.
Oh, God. It's pick on my portfolio day, apparently. It's pick on my portfolio day. If Fuzzy Bear comes out with a negative GL report here today, then I really know it's pick on Denny day.
I'm just trying to give you the news as it comes across. I mean,
I see it. We got Phil LeBeau. I very much respect Phil LeBeau. Awesome. Nobody knows that industry better than him. Best of breed in analysis for automotive, Phil LeBeau. Take a bow, buddy.
Wait, yeah. So U.S. prosecutors focus on securities and wire fraud in Tesla Autopilot probe. Tesla just seems like we talked about how the backdrop of the industry right now for EVs isn't great, but Tesla seems like, there might be some other issues going on there. But Tesla always has buyers coming in. It's like it's probably going to close up, 2% today on this news. I have no clue, but it seems like there's always underlying demand for Tesla stock. Dennis, we talked about it yesterday, and you called it well with Celsius, that with some of the retail favorites, even in the face of bad news, there tends to be demand. I mean, I don't know. Tesla might.
It's no longer a retail favorite, though.
I know. I think it's just been, like the story, like how many people have just been that love Tesla have just been buying the dip, buying the dip, buying the dip. And maybe they were buying up at around 250. Maybe they were buying at around 200 and now down at 177. They're like, well, man, I've already, lost some money on this. I'm not going to buy again down here.
Yeah.
I would like to see all this stuff shake out for Tesla. I mean, it sounds like, again, there's just more problems coming. The company did announce that they're shutting down its Gigafactory in Berlin, some protests going on there, but that shutdown's not going to be as big of a deal as some of the headlines were making it out to be.
Yeah.
Either way, I'm completely. I held Tesla stock for a while, sold all of it a while ago. I have no desire to buy it. I have no desire to buy it back right now. Again, gonna just kind of watch and see how this story shakes out.
Yeah, I'm obviously wrong on this. I don't know. Maybe I'm going to sell more of it today and just eat it, but it's just too many things going wrong here. And I do believe long term it's going to be a good buy, but this company has so many current problems. EVs are just not selling. The one industry you do not want to, maybe you do want to invest because they're all like gone down to nothingness here now, but the one industry that's just in shambles right now is EV. Just in shambles. So I don't even know what to say anymore. Tesla, Intel, just terrible buys.
Let's talk about another stock that reported some bad news today, not earnings related. Snap this morning announced after the company announced a proposed private offering of $650 million of convertible senior notes due 2030. Snap Inc. trading down about 75 cents, 4.5% on the news. I don't know. Like it seemed like the company was doing okay. The stock's been doing well the past few months. The company reported.
This is why they do the offering.
Yeah,
this is what they do. They wait for the price to rally so they can get a little bit higher price on the offering. This is why it's hard to buy these companies that are struggling, on these rallies, because then they turn around, they get a lift for a week or a couple of weeks, and then they turn around, do an offering, knock the stock price right back down. Why? Because they need the money. That's why. Buy good companies that are making money at reasonable valuations. You don't have these problems. Snapchat needs the money. So they wait for the stock to rally a little bit, knock it right back down. Terrible news for shareholders here.
Oh wait, so we don't have a price on it yet, right? It's a private, so we're not going to know what it is.
Yeah, they just announced it, I think, Joel.
Oh boy.
650 million aggregate convertible notes, talking about the convert. Maybe you do have a price on it. They're the convertibles. They probably do. I'm looking through the report.
It's tough when, sometimes they're snapped right up, no pun intended. It doesn't look
Not
like
lately.
that doesn't look like the case here. Technically, if you've been holding on to this trade, it did spike under 16 momentarily, but did rebound. So I would say bulls, you're kind of still in control as long as we hold 16. We're 45 cents above it with an offering up there with a new closing high for the move yesterday. You got to get your offers out there. 1674, 1675 would be a gap fill. So you might get some people that didn't see the news and buying it off the open. Maybe you press it to the bottom of yesterday's range. Must hold $16.
There's so many buy the dippers in the market overall here, but there's so many red flags. And maybe it's a good day to have David Traynor come on. We know he's been bearish here because I'm seeing red flags all over the place here right now. I'm kind of, thinking I should almost have been raising more cash into some rallies, and we're not even far off. It's not even a bad time even selling in the hole here, Joel. It's not even that bad because the S&Ps, are like within striking distance of all-time highs. I mean, there's red flags all over the place here, to competition coming for NVIDIA, with Apple's news yesterday, shrugged off. They buy the NVIDIA dip again. I mean, to all these earnings reports, let's go to Shopify, AB, just to go farther into our point here, because here's a retail darling. Here's one of the biggest technology companies in Canada, absolutely getting smacked here today. Give us the details here on this one.
Yeah, so Shopify reported this morning EPS came in at 20 cents, beat by 3 cents, revenue of 1.86 billion, beat by 10 million, results eclipsed by gap loss, margin shrinkage in Q2. So I think some of the, more expensive, higher costs are cutting into Shopify's earnings. And Shopify, like when we're talking about Amazon's e-commerce business isn't really the driver of the business, right? It's AWS and all the other things the company's doing. There have actually been analysts that have written off Amazon's e-commerce business as this thing is like worth no money. Basically, they spend so much money to do this, to do the e-commerce and ship things so fast. Shopify doesn't have that. Shopify doesn't have the other arms of its business to help to help the e-commerce side out. And I think that stuff is just kind of slowing down. When COVID hit and everyone was buying everything online, Shopify's stock was doing amazing, not doing as well right now. Shopify says gross margin for Q2 is expected to decrease by approximately 50 basis points compared to Q1 2024. So this thing has been a little bit out of favor and getting crushed this morning, down 20%.
I'm not. Again, some dips have been getting bought, and you think maybe this is the dip to buy. I'm very torn on this market here right now. Like, part of me thinks, okay, well, interest rate cuts are probably coming in the back half. And you know what? They've shrugged off so much bad news over the course of the last couple of years, from different companies and stuff, and dips keep getting bought. But then I look at us sitting up here at all-time highs, and I think, what business do we really have sitting up here trading, ridiculous multiples, like even on a Microsoft, like 35 times, even on Nvidia at 35 times. I mean, it's grown and grown and grown, but, stocks just aren't cheap. The bottom line is this, and you get Buffett, and you watch Buffett a little bit from what he said on the weekend, and it gets you thinking too. I mean, he's comfortable in cash. Well, the best times to buy stocks historically are when Buffett is buying. And Buffett is buying nothing. Buffett has bought nothing really. He's bought the odd stock. But really overall here, Joel, what's Buffett bought in the last 2 years, really?
Oxy.
Oxy.
Which also reported yesterday.
That's his big buy, is Oxy. I just think, cash is still prudent here right now. I don't think you got to be chasing stocks. I don't think the next big bull run's coming anytime soon. You got a lot of problems in a lot of different companies here. So I'm just of the opinion that I think sitting on your hands here and waiting for a better opportunity may not be a bad idea.
I agree. I'm just looking at this Shopify here, and we talk about gaps. Well, we're back here, folks. You see where the multiple stars are here? That was a gap fill at 62.41. You exceeded that in the pre-market. So I'm looking at this area. I mean, down $14. I mean, I do have a penchant for selling in the hole, but for a $14 hole, I think I could pass on. But this whole area back from early November, this is called $60, a nice psychological level, and it made multiple lows in that area. So if you start pressing, you take out the pre-market low, look at 60 for a possible bounce. And if you're looking, I mean, since you've made the low, the highest you've been at 65.13. So that's what I'm looking at here in Shopify. S&Ps were teetering, and then that Tesla news came out and squashed.
The Tesla news is not helping the S&P. It's down $6, but there's just so much other bad news today. It's a really bad day for stocks, to be honest with you. Like, there's so many other reports.
Yesterday was a bad day, and it went up and made a new high for the move.
Yeah,
Disney yesterday. Yesterday was
Disney was not good either. I mean, we should talk about Disney, and that it wasn't bought at all. Dip not even sniffed, not even sniffed at all, and continued to go down. Now you get into the gap area here too. You almost think it's inevitable it's going to fill this gap down to 99. So there's no point to coming here at 105. I mean, 99 looks like it's in the cards, especially when the companies are lowering guidance or being conservative for the quarter.
They're telling you something.
That's when you got to just say no. Like, it's one thing. Then when you got to beat and a raise and they hit it down just because expectations were too high, those are the better buys because the company's still performing, but expectations were simply too high. And then you have quarters like Disney that, okay, yeah, they beat, but then they come out on the call and say, we're in for a tough quarter here. There's some reasons, and they're justifying the reasons. They say you're in for a tough quarter, it equals sell. that's pretty much usually what it equals. And you know what? It opened at 108 and then just continued to leak. You know, it was 110 in the pre-market, I think, when we were talking about it, continued to leak. It's hard to buy stocks when they're warning on the next quarter because there's nothing good to look forward to. It's like, oh, they're warning. You know, unless you're completely in the gutter, you know, and really, you know, Disney was not the case. I mean, Disney wasn't far from its highs when it, you know, came out with this crappy quarter. I think you got to go back and just, you know, lay off stocks that are warning.
And also, you know, you can go with the theory, oh, they're lowering the bar so they can clear it next time. Well, you're going to have to wait 3 months for that scenario to come out.
True.
You know, I mean, and that's not a great, I mean, the company comes out, gives you fundamental news, right? I mean, sometimes you just got to listen to them. So, boom, boom, no
I think
830 numbers here. Take us away. Take us on.
you know, we're talking about that this morning, some bad news in the market. And I think even the quote unquote good news, you could interpret as bad news. Affirm Holdings reported Affirm Holdings reported earnings this morning, and the earnings were good. The stock is trading higher. So EPS, they reported a loss of 43 cents, which beat estimates by 28 cents. Revenue came in at 576 million, beat by 26 million. Strong guidance moving forward. Stock is trading higher. The reason I say you could interpret this as bad news is it's probably not a great sign for the economy if more and more people are relying on services like Affirm to buy things. And I don't know, I mean, if you guys do a lot of like online purchasing and stuff, but you can do Affirm for everything now. I mean, you'll check out like a DoorDash order of $20 and it'll say, do you want to split up this McDonald's payment into four different payments? So, you know, Affirm trading higher this morning, but again,
Really?
yeah.
Isn't all the bookkeeping make it like worthless to do something like that? Well, I guess not everyone has triple digit McDonald orders like you do. So,
Yeah.
Well, we all do soon because inflation keeps going up at McDonald's.
you know what? Let's just talk Affirm real quick because it did get a really nice pop here to 37.50. But what I think is really important is you in the regular session, 36.5. Even if you get back up there, you had sellers. It was a triple top there. I'd love to see it. I don't even know why it got through 36.50 in the regular session, but now reset that number. And then on the downside here, if you're shaking, if you lose 35 bucks, there's 3 lows in that area. Also, just not a real favorable day for the market, like to be having
No.
a good earnings report. But a high of the day could be in. I think it's in Affirm at, well, the pre-market high, 37.50. You got almost $2 to go to get back there.
And Upstart set the bar for Affirm
Yeah,
low last night. Upstart came out, they missed here, and the stock is trading down, what, 15% here this morning? Was 13%, was trading down last night. I have it up here, AB, so I'll just give it. They actually beat. They lost 31%.
Double beat, but the guidance was, so they, EPS beat, revenue beat, EPS lost 31 cents, beat by 8 cents, revenue of 125 million, beat by, by 0.2 million basically. But again, issued Q2 revenue guidance below estimates. And so, I mean, I don't know. It sounds like people are lending money right now, that people are going to Upstart. People are going to Affirm to help pay for things. Probably not a great sign.
I wonder what the rates are on that.
It's ridiculous.
The Upstart loans
my
are probably
gosh.
insane right now.
I want to go look that up.
I feel like buying. So my thesis here on Upstart is buying down here at $21. Either if we get rate cuts or something, a stock like Upstart is going to be one that benefits the most. I mean, if we get any sort of rate cut this year, and I would expect Upstart to go up, 30 to 50%. And then
Why?
Because it's so beaten down, and it's in this like industry of just very growth sensitive or interest rate sensitive in the growthy side. And then once they cut rates too, that's going to make loaning money from Upstart more attractive. So you get that double whammy of the stock becomes, the stock will go up, and then the actual business from the fundamental perspective should get some more interest as well.
I think both these companies that are just burning cash here, and I think the defaults are an issue. I think you see
that's what I
more
was going to
defaults.
ask. Yep.
I think these companies, the market has kind of spoken here. Upstart was $400 a share. It's $21. Affirm was $176. It's $35. I think that both these companies are going to struggle for a very long time. I don't see any upside. And again, stocks can turn around. And I get your point. People are struggling. They're going to use these services more. But then the defaults go up more. Like you're lending, you're trying to figure it out. And obviously, maybe they take some of this off the books and send it elsewhere to the loan sharks or whatever they're doing. But the stocks have struggled so much. I mean, Upstart's not even that far from its lows.
Yeah, so, and I'm not saying I love Upstart long term. I'm saying that if we do get some sort of interest rate cuts, or that even becomes part of the conversation.
Yeah, the cuts help.
I think you're beating down names like your Upstarts. Who else do we want to throw in that camp? All these stocks that ran in 2021 on to ridiculous valuations, and since then are still 80% off their highs. Chat, help me out and throw me some more names that you would put in that Upstart camp. I mean, Carvana was there until it's had its rally.
Yeah, it's Carvana. I'd give it a little alert. Oh, well, it's too late now. It had a bad day yesterday after making a new high for the move. So now you're falling into that gap area here. It's a big old gap here down to 91.12. So if you're still holding Carvana, oh boy, better look to sell if there's any kind of strength in this one. Affirm, it's hard to find support here in it. You spiked or Upstart. I'm sorry, we already did Affirm. Upstart snuck under $20 here. We haven't been under $20 since November 10th. You made a low at 1984, another low at 20. I mean, a psychological level 20, something like that if you come back down. But you already see buyers perched just above 21 right now, trying to bring in some stock patiently. So that's a look at Upstart. And I can't believe that stock did, Dennis, that did hit 401.49 in October of 2021.
Everything was just going up. It didn't matter if you knew what they did or didn't know what they did, they were going up. Throwing darts at the board like Portnoy.
All right, let's keep it ticking. Some, shining bright spot in a sea of bad news. You had Reddit give its inaugural report yesterday. Again, the social media company's first time reporting since becoming publicly traded. The company did well. I mean, so the numbers come in. EPS came in at $8.19, missed the $6.97 estimate. Sales came in at $242 million, beat the $212 million estimate. And unlike a lot of the other companies that we've talked about today, Reddit reported strong Q2 guidance and revenue guidance above estimates. So you had the double beat with strong guidance. Stock trading up about 12% this morning, but we've sold off quite a few,
Got over 6.
They lost $8 last quarter.
Yeah, I was just going to say that.
How do you lose that much money?
I don't know.
How do they rally it on that? Holy, not for me. Maybe I just don't understand, how stocks, valuation or whatever. But I read this, the revenue, sure. Oh, but the revenue beat. But, in the revenue, they're guiding it a little bit higher. And, their metrics are up a little bit. Maybe they're going to figure it out. But holy mackerel, they burning cash too. I like buying companies that make money, not companies that are burning cash. And you know what? That is being proven correct here because there's so many companies that, are still burning cash and they're just not participating in this rally at all. It's the companies that are really making a lot of money that are doing well. So I don't know. Maybe they're going to turn around. Maybe there's a path to profitability here, but just, I don't follow the story closely. But when I see an $8.19, loss for Q1, it's jaw dropping to me.
That's a lot of money.
One-time stuff there.
Is there any one-time stuff? Is there any I
don't know. We're looking at headline numbers. I've given it 20 seconds of analysis here. But when I just look at these, and that's what the market like usually looks at. But they look at the revenue guide, the guided up, the revenue. So that's what they're only caring about. They're like, oh, we'll worry about earnings later. Well, you know what? We're not in 2015 anymore, where we were just looking at revenue. They do look at earnings here now. I wouldn't be surprised if this eventually fades, this rally.
Well, it's already faded. It got over $60. Wow, what an overshoot. 60-40. But this is what let's cooler heads will prevail, when the more liquidity comes in. And overall, this thing has been a wild child. This $56 area, I don't know if you missed your opportunity. High at 55.20, that's your 50% retracement. I mean, unless you had offers in there on the way up, I don't know if you're going to get things are starting to thicken up. You are $5, over $5 off that pre-market high. Just a steady leak here, but I like 56 now after the reset on Reddit.
All right, well, it is 8:35 a.m. Eastern, which means it's time to bring our special guest on of the day. Today, we've got David Trainer hanging out with us backstage. Let's go ahead and give David our very special pre-market prep welcome and catch up with David when we come back. All right, David Trainer. Oh, yeah, sorry. That intro's quick. It catches up. Founder and CEO of New Constructs. David, welcome to Benzinga's Pre-Market Prep. How you doing this morning?
I'm doing great. How are you guys doing?
Good. We're just trying to decipher this market because it seems like, with all the bad news out there and worrisome earnings reports, and yet the overall market's trading not too far off all-time highs. I mean, what do you make of all this?
It's nutty. I think everybody's waiting for a shoe to drop. It's hard to make sense. It feels like the loose monetary policy, fiscal policy, it just keeps the party going. They just, as soon as the drugs wear off, they're bringing a new set of drugs and people keep on rolling. The Reddit example you guys were just talking about, I thought was great. I mean, like, here's a business that's just losing tons of money, never made any money. Not sure there's a path to profitability because there's that inherent catch-22 in the business model where if they don't keep the people that bring audience and activity in happy by letting them make money, then they lose the people that bring people in. And so it's kind of one of those things that it's hard to see if it'll ever make money. And yeah, like just talking about revenue growth again, like that's all that matters. Just makes you wonder if we're going back to some wild times.
Well, and the question is, are we going back to wild times? Because you've hit the nail on the head with, obviously over the last 10 years, been loose monetary policy that has, caused asset prices to increase and inflation to increase substantially. They have tightened that up, but, they're talking, about, all of a sudden, here's markets at all-time highs, and we're still talking about interest rate cuts coming at the back of the year one. If you were Powell, would you be, coming in here and cutting rates in September? Or what do you think the Fed is thinking? Let's not say your power, but let's just ask you, what do you think the Fed is thinking here?
It's a tough job. It's a tough job. And I think that we really have to be mindful of the political pressures that they face. And I think we have to be mindful of that for everybody in office, right? And ever since it became a game of how to get reelected, people care more about pleasing sort of the voters in the present moment or their key constituents. And I think Powell's under pressure to make sure he keeps this market and economy looking good. And I think that keeps him from doing what he ought to have been doing, is having rates higher for longer, sooner. Things are, look, anybody who's like buying groceries, just trying to make a living, right? I mean, you're not feeling like inflation is down. I mean, just the fact that it's now at 3 or 4%, but it was 8, 9% for a while. Like, the prices are still high. They haven't retreated at all. And so I don't know if anybody, that matters in terms of like larger consumer spending is feeling any relief. And I think all this Fed speak and I like this talk about cuts, I think it's just about keeping markets up and keeping the impression and perception that things are good, strong and happy. And I think we're playing kind of a game here where we act as if everything's great, but things really aren't that good.
Is the consumer finally teetering here? I saw from Zero Hedge tweeting out, I see some good stuff from Zero Hedge. Consumer credit card debt, record highs, cash savings of the consumer, record lows. And you just look at that combination, you think, where's the next money coming from to keep driving earnings in the back half of this year if the consumer is strapped? I mean, we've seen higher ticket stuff start to suffer. Obviously, EVs not selling at all. A lot of that, maybe people are buying hybrids instead, but I think they're just not buying cars. I think they're just not buying, as much as they were before. And, maybe that's incorrect because Ford, had pretty good numbers. GM had pretty good numbers, but electric cars are more expensive. These Rivians, which we were pricing out $70,000 US, I mean, there's just not, a lot of, consumers that are going to be able to afford a $70,000 car when interest rates are this high. So are we just, and I don't know where I'm going with this, but are we just, in a situation where the consumer is going to be more strapped for cash going forward?
I think so. I mean, I saw that chart too. And sometimes I wonder if all the zero hedge stuff is 100% accurate. But I've been seeing other charts similar to that for a while. And it was startling. I'm with you, Dennis. I was like, whoa, okay, if that's the case,
Yeah.
we're definitely going to see a bit of a slowdown. I think we have to. I mean, we've been talking about sort of the COVID stimulus and these other things running out for a while. It kind of, I think it's got to have been happening because the spigot hasn't been quite as wide open as it was for a long time. And I don't think it means there's going to be a cataclysm, because I think if we get anything close to that, the government would turn the spigot back on and just start writing checks again. But I do think it's got to dampen. And I think with respect to EVs, I think you hit the nail on the head there too. You're right. Like, people just aren't into it anymore. I think we've saturated the market of people who are willing to go out and pay a major premium for an electric vehicle when the utility on the margin isn't that much better. And so I think that market, as we're seeing by some of the major manufacturers cutting back, and then even Tesla's numbers being down.
Yeah,
we've passed the prime in that market.
I mean, competition almost feels like, we've been saying competition coming for Tesla. It seems like competition is backing off. And even despite competition backing off, Tesla numbers are going down here. It's like this industry, this EV industry, where we were expecting this huge, balloon to just inflate. It's like it feels like it's almost shrinking here right now, which is, crazy to think about. Like, I still think we're going to eventually have EVs, but I think the consumer is just more strapped than the market wants us to believe.
I'm with you. And look, hybrid.
David, what about the AI trade? What about the AI revolution? Isn't that going to increase productivity and whatnot? Talk about some of the darlings in the AI sector. Is it just something where you got a little bit ahead of yourself, which a lot of people said, including myself, a while ago? What about AI and lower rates? Are they just going to come in and boom, we're going to be at 6,000 in the S&P?
Yeah, we're just going to hit the singularity and all just sort of ascend into the next stage of consciousness. AI is going to take us. Yeah, I'm with you, Joel. I think the AI is a bit overhyped. I mean, look, there's some companies that are going to benefit, but there's a lot of a hype, similar to the internet bubble. Look, too many people see AI as some magical power that's going to suddenly transform previously untapped uses of energy or productivity and make them all real. And it just doesn't work like that. I think we're too excited about the tool and don't really know how to use it. ChatGPT and these other chat bots, look, they're based on the internet. And we all know that a model or a program is only as good as its inputs. And if you're basing your input on the internet, you're in trouble. Like, what percentage of the internet is true? And so what the next stage of AI is really going to be about making sure that we have meticulously prepared the data sets, large data sets, to fuel more focused versions of an AI, right? Let's say, like what we've seen already in manufacturing. Well, you could say that the automated assembly line for car manufacturing is a form of AI. It's a very specific form where you've taught the machine to do something very specific that it can do, and you can trust it to do it on its own. Right now, AI is sort of like, well, I can kind of trust it to help me get 70, 80% of the way there. The next level is really about creating the data sets that allow the AI to really be 100% reliable in very specific areas. This broad-based general intelligence thing, that's so far in the future that it's just not even really worth talking about. We got to get the little things right before we can expect the big things to be right.
It's hard to say whether it's a net benefit to the world or not too, because I mean, yeah, we're going to increase productivity, but that's going to be at the expense of probably jobs. I've been torn here too, where if we go more automation, I mean, even look at ChatGPT. You think about how many people who write reports and do things like this. How it's going to be good for the companies, but if you got a bunch of, editors in there, hundreds of editors, in a major publishing firm, all of a sudden, AI is doing that. It's like, well, we don't need 100 editors. We need 50 editors. I mean, I can't see a path where AI, like there's definitely some people that say AI is going to create more jobs, and it is in certain pockets, but overall, I think it's going to cost jobs, and I'm not sure how the fallout goes with that. Like how do you consume more if you're losing jobs? So I'm torn on. I obviously AI has been very good for Nvidia. It's been very good for a number of companies. We know that. I just don't know if it's good for like all companies. I haven't figured that out yet. Thoughts
I
on
agree.
AI actually being a net detriment to the world?
I
I'm
agree. I mean,
curious.
especially if some of it gets put in, used in the wrong hands. I mean, look, we got some issues there. To the extent we start trusting machines, we have to trust the people who program those machines. And we've already seen, right? We have first order evidence. How Google was manipulating search results because they had people in there that were driving the algorithms that had major biases. And so, what the real danger of AI in many ways is that those biases can be scaled out exponentially very
Yeah.
quickly. And there's a lot to pay attention to here. It's for sure not all good stuff.
Davis, give us a little bit of historical perspective here, like the S&P and maybe some of the indexes as far as historical, valuations, and then maybe that could give us a better perspective on the markets. So I guess we taught the S&P the most. Why don't you go there, where we're at, where have we been, and perhaps where we're going? A lot of people say that we're doing okay this quarter because a lot of the companies lowered the bar and got over the bar. Where are we at on a historical perspective?
I mean, I think when you're talking, about lowering the bar, like this has just been a classic Wall Street ploy, right? We see this with Tesla all the time, where the number is here, and then analysts lower their estimates, and then we get to earnings, and then they beat this, but they're still below. And that's a game we play, I think, on a micro level all the time without really paying attention to where the overall market is. And the overall market's it's been on a historic run for a while. And I think we've heard many senior folks in the business say, "Hey, we're really stretched here. We should be careful." And I think that's the case. And I think that's a case across all of the indices, particularly the QQQs or the NASDAQ, because that's the most volatile. But valuations are stretched near historically high levels and have been for some time, which leads to the question, if they've been stretched, right, already, well, how much more might they stretch, right? You don't want to go in and short it. I mean, I saw a lot of folks go out of business during the tech bubble, shorting too soon. They were right.
Yeah.
They were just early. And I think these days, and you talk to institutions, and 99 out of 100 will say, I'd rather be right about catching an upswing or a wave up than wrong and trying to bet that it's going to end, because over the last 15 to 20 years, betting that it was going to end has been a very bad bet. Just going with the flow, the MOMO, the FOMO, all that has been a great bet. And I think psychologically that's just compounded over the years. And all of the retail folks have joined that train as well. So you've got this really huge behavioral bias almost towards a much higher and more expensive market. And nobody wants it to go down because they're all making money on it. And we've seen so many stocks trade disconnected from fundamentals for so long that you really start to wonder, do fundamentals matter at all?
Well, I mean, this is a good point you're making too. Maybe we should talk the value trade, because there is so many companies that have actually not participated. And, you can look across the board at, some of the, even the drug stocks, forget about Eli Lilly for a second here. But I mean, there's a lot of drug stocks trading 9, 10, 11 times earnings. I mean, there is some value out there in pockets, but those stocks just are hated. Those stocks just don't seem to get any love at all. Obviously certain ones do, but it's been the tale of two markets, really. And it's been about the growth trade for a very long time in these markets. And the value stocks, the core stocks, really haven't gotten any love. But, there's a lot of companies that are sitting here at 11, 12 times earnings. And is it going to be their time eventually? And or, is it just more of the same? Like, we just can't break, if you don't have a cool AI story, the market's not interested.
Dennis, I think that's such a great question. And David Einhorn had a great interview a little while ago, and he called a couple things like that I've been saying to my firm and clients for a while. Number one, I'll lead with, because it's the shortest. The SEC is hamstrung for doing its job. because they're now afraid that if they were, for example, to bring some of these people to bear to pay for their crimes, the stocks would get crushed, and then the SEC gets sued for causing, so the shareholder lawsuit for all the damage done. And so the SEC sort of like, whoa, we can't do much. And then I think with respect to the value versus growth trade, Einhorn said that they had to change their whole strategy because they had to assume that the value that they were seeing would never be found. And so he invests exclusively in stocks engaging in huge amounts of shareholder return so that it doesn't matter whether or not the rest of the market sees the value. Either all the shares will be bought back or the stock's going to end up going up, right? So there's this idea that the perception of value is effectively absent from the marketplace for a couple of reasons. For the reason you said, and for the fact that some of these companies are getting away with what would have gotten so many other companies and or executives perp walked back when I came into the business. All these forward-looking statements that are untrue, misleading, et cetera, that tend to boost the stocks. And I think there's a third factor, and that's from payment for order flow. And what payment for order flow does for the institutions, as you guys know, it gives them a preview of where the stock's going to go before it goes, right? You know where the order flow is going. So you know exactly how many buy orders are coming in compared to sell orders. Well, if you know that, then you're not taking nearly as much risk when you own a stock that trades disconnected from fundamentals, because you can get out before the retail folks get out. And so you're safe. You can speculate in a way you couldn't speculate when I got back into the business in the 90s and the early 2000s. And so that means that stocks can stay elevated and disconnected from fundamentals for a long time without regard to regulatory enforcement or valuation or even any sort of trading discovery. And so the answer, that's a long-winded answer to say, Dennis, I don't know what's going to bring it back. I don't know what can.
All right. Well, David Trainer, thank you again for joining us on PreMarket Prep this morning, CEO and founder of New Constructs. David, it's been a great discussion. We'll have to get you back on the line in a few months to catch up.
Thank you. I enjoyed it.
Of
All
course.
right, David, thank you very much.
All right, guys, we've got about 10 minutes left of the show. A little bit less, actually, 8:52 a.m. Eastern here. Let's get back to the earnings train. How about we talk some, let's talk some Uber.
And again, I'm on record saying I don't like Uber. I don't like the business here. And this is because I think robo-taxis are going to come, whether they're coming next week, next month, next year, or 2 years from now, they're coming. And they're already here. Waymo's already operating it. I mean, this stuff's coming. And maybe Uber's going to be a big part of this. And maybe they're going to figure it out and have their own cars and their own fleet and stuff. But there's a lot of competition coming for this industry specifically. So where we've got basically the duopoly for so long between Uber and Lyft, and Uber really running the show. Some people go Lyft, but Uber is such a bigger company doing so many other things. I think there is competition coming here, and I think you're paying a premium valuation for Uber. I mean, give us the earnings here, and then I'll give my full analysis.
Yeah, so Uber reported a loss of 32 cents a share, missed the positive 24-cent estimate. Sales came in at $10.10 billion, missed the $10.11 billion estimate. And then they announced gross bookings in Q1 that were short of expectations and guides in Q2 below the consensus expectation. So overall, just not a great report for Uber, which, we've been talking about the expectation. I mean, Uber's been trading pretty well into this report. I mean, a little bit off its highs of around $82, but still at like 75 before this. Or I guess we closed at 70 yesterday. But either way, I mean, Uber was still up around its all-time highs into this report. So the bar might have been a little high, but you're seeing maybe a slowdown in bookings, a slowdown in people taking rides, which probably isn't great news for the economy. But again, Uber stock just, getting a little crushed this morning on that news, down $6 or about 9%.
This is competition's coming here, and 55 times forward earnings, 80 times trailing earnings. The valuation is fully valued here. This is not going to be this huge growth thing. I think, honestly, robo-taxis, whether it's from Tesla or whether it's from other places, and again, maybe Uber's going to have a piece of that too, or coming. And Lyft as well. Lyft had a nice pop yesterday. I just tried not to use the pun. I think the pop gets faded here too. I think these are two stocks that I absolutely do not want to own.
I'm gonna bring my charts up here. Sorry about that, folks. We're gonna focus on the monthlies here because I'm just looking at this at the bottom right chart here. Been holding $66 for the whole year, right? You had 3 lows in that area. You're breaking down below 66. I would just keep that number long term. I would say unless this thing can establish a 66 bid over the next couple days here, I mean those monthlies from October, November, and December, that's just absolute air in there. So this is losing major monthly support here. I'd have to put a caution out on this one. Not trying to buy the dip anywhere, and I think pops in this. I don't know if you want to sell it in the whole $6. Maybe if you bought it at 22 back in 22, you do. But this is a breakdown on a longer term chart here for Uber. I'd be looking for the exit, but Lyft going in the opposite direction. Are you going to
a little bit, but already fading a little bit? What'd they do? Give us the earnings for this one, AB.
On Lyft?
Yeah, grab them quick.
Yes, sir. Give me 1 second. Sorry. Our power ticked out here, so I had to reopen everything back up. Lyft reported an EPS of I'm seeing gap. Okay. Lyft EPS came in at 15 cents, beat by 3 cents. Sales came in at 1.28 billion, beat the 1.16 billion estimate. So Lyft's numbers looked a little bit better than Uber's, and you're seeing the market reflect that, giving Lyft a little bit of boost today, trading up 4.5% compared to Uber's about negative 10%.
Again, I got a thunderstorm here, so if I lose power, I'll be gone for 30 seconds because I have my Generac, so I'll be back in 30 seconds. But yeah, again, I just look at that Waymo video from my buddy Rahit, and I'm like, this is here, man. It's not robo-taxis. Are they never coming? I mean, they're here. Waymo's already operating. You're going to start to see this stuff pop. Must timelines are always too ambitious. So we're not seeing robo-taxis around the U.S. this year, but it's coming the next couple of years. They're coming. So, I mean, what does that mean? Maybe Uber's going to be a big part of it. Maybe they're going to, be a big part of it, but I just think this is an industry that competition is coming heavy for, and I don't want any part of it. So
interesting technical setup because your pre-market. I mean, did you get one crazy candle there? Yeah, you got a crazy candle at 1897. Maybe they put an extra or left off a decimal point or something like they did last quarter. But right now you got to reset. You're still up 78 cents. You've had people selling into strength over the last 2 sessions. So if you're looking for a big move here, I'd say clear this the triple top at 1770 and establish an $18 bid early. If not, I'll be looking at a fade in this one, and let's just call the market 1660. That was right near the low from yesterday. But if you're buying this one out of the gate, man, you want to see it through that triple top 18 bid. A little bit of a little bit of a weaker market today, but the 2 stocks going in opposite direction, and just roll on the whole car thing. And I just, but still been looking at this $46 level in GM here. I don't, if you want more on your GM trade, man, the longer it takes to get through this 40, I mean, it's major resistance. Resistance is resistance.
Ford's breaking down now. GM's
I know.
I actually, I flip, you gotta listen to the show, but right now with the recent S&P rally here, and I saw rips. We just ripped on the S&P.
Oh, we had a tremendous rip.
170 points. You know what? I don't think this is the market that we're making new all-time highs. I think we're going to fail here. So I think you're raising cash into these rips. The Qs just ripped 20 handles to 40 handles. I just bought 420 on the Qs, and maybe I'll turn around and sell them, and just pocket the 3% we just made here in 4 days. So I think it's just not going to be easy sailing. I think we're in a trader's market. You're selling rips. Maybe you're still buying dips too. But there's no reason to think that this market is just blasting off. We're going to see S&P, Dow 60,000 coming next week. I don't think it's going to happen. Where is the Dow? I don't even know where it is. 35? Where are we? Where is the Dow? 35?
We never look at the Dow.
Oh, don't say that
Nobody
to
knows.
us. People
Nobody
that run some
knows.
other morning shows, you'll get your head
38,
bitten off and
39,
ripped on Twitter.
39,000.
39.
39. All right, it is 9 a.m. Eastern, time for us to wrap up this morning's pre-market prep. Had a lot to talk about, actually. Felt like kind of a slower news day when we rolled into the office this morning, but then, once we started breaking them down, ended up being a lot to talk about. Of course,
We didn't even give TripAdvisor any love. It's down 30% right now. The strong consumer. TripAdvisor.
Oh man.
This is a bad day.
Chart,
all you are as a trader, and this is my final rant, and then we'll let AB close it up. But all you are as a trader is just an information processor. You're taking in new information that's coming to us continuously to make better trading and investing decisions. The information that we got today was all bad. That's why I'm a little bit like, we're only down 16 S&P handles here. There was a lot of bad crap today. So I think you're selling rips here right now.
And we got some bad news yesterday in the market. It shrugged it off, and it was a choppy day, kind of weak near the end. So the market, it tells. I was shocked. This TripAdvisor, I'm looking at it. If you want a potential, 14. Now it's not going to 14, 15. I don't know. Maybe look on your weeklies or something here to find. Oh my gosh, we are right. Wow. 15,
what did they say?
I don't know.
The earnings were 12 cents versus 2 cents and 395 million versus 394 million. It's a beat and a beat. What did they say on this call? They had to say something. Okay, TripAdvisor shares are trading lower after Liberty, TripAdvisor, and Special Committee ceased discussions with third parties respecting a potential transaction. So I guess I didn't even know that Trip was potentially going to get bought. Now it's not. So I guess that's what it is. But holy cow, smackers.
Interesting. Yeah, we'll have to watch the airlines and stuff to see if there are signs that the travel demand is slowing down, because I think that could be, kind of your canary in the coal mine, that when the consumer becomes less, not in a great position and starts cutting out those trips, probably a good place to start. But all right, let's go ahead and wrap up the show today. Joel, who do we got joining us tomorrow?
You know what? It's a good time to have Mark Chaikin Analytics on. I know Dennis got a secret message from him a couple days or a week or so ago about a little bit of a rally. We got a rally, and we'll see what he thinks here.
Mark's still bullish.
Mark's still bullish. I just want to say, and we, following the show, I don't know if y'all listen to it like every day or whatever, but we had a guy on Monday. We had Todd Gordon on, right? And you could just, I've heard Todd at like different stages over the years in the markets. He was damn cautious. He was accepting the rally. It was exceeding his levels. It was exceeding his expectations on the rally and stuff. And, sometimes, it's just, timing, timing is everything. I just pulled up this Delta chart. And if you're, using the TripAdvisor and all these things, Delta's been soaring lately. So,
UAL, Delta, the airlines are doing pretty good. You know what? There's a lot of reasons to take profits. There's a lot of reasons that stocks are still pretty high. There's a lot of stocks that have done very, very well. And you know what? It would really suck if we rolled over here when the market's telling us, that a lot of companies, mid caps and small caps, which reported today, a lot of mid caps, a lot of small caps report here today. They weren't great, man. These earnings on a whole were not great.
Yep.
One more thing. We're coming up, we're talking about consumer slowing down, this, that, and the other thing. We're coming into retail earnings season. There's going to be your haves and your have-nots for that. So buckle your seatbelt. Retail earnings, we'll get the true reading on the consumer, and then next week we get some more inflation numbers. So a lot of catalysts in this market coming up.
All right, guys, that will be a wrap on today's pre-market prep. Friendly reminder, we will have 4 earnings calls tonight on Benzinga's YouTube account. That includes ARM, Robinhood, AMC, and Airbnb. So if you're in any of those stocks, if you want to watch some of those calls, you know where to come. Come to Benzinga's YouTube channel. We will be back at 8 a.m. tomorrow morning. See you guys then, and try to stay green.